They told us the worst was over. They said housing always goes up. But in 2025, the cracks are no longer hiding. What we're seeing right now isn't just a dip. It's a collapse. Quiet storm is hitting the U.S. housing market. Millions don't even realize it yet. The dream of owning a home is becoming a nightmare, especially in these cities. So before you buy, invest, or even think about entering the market, you need to see what's happening behind the headlines. Because the biggest housing crash in over a decade, it's already begun. Let's set the stage before diving into the city. Welcome to 2025, a year that was supposed to bring recovery, stability, and a return to normal in the U.S. real estate market. But instead, we're watching something few predicted. Entire housing markets are stalling. Home values are plummeting. And millions of American families are caught in the middle. It's not just about high mortgage rates anymore. It's about job loss, insurance collapse, skyrocketing property taxes, a growing number of cities that are starting to look unsustainable. In this video, we're diving deep into 10 major U.S. cities where the housing market is falling apart faster than anyone expected. And this isn't fear-mongering. This is what the numbers are saying. From rising foreclosures to vanishing demand, these aren't warning signs. They're already happening. If you're thinking of buying, if you're a real estate investor, or even if you're just curious about what's coming next, stay tuned, because what you're about to hear might just change the way you see the American dream. Number 10, San Francisco. California let us kick things off with one of the most iconic cities in the world, San Francisco. Once the crown jewel of innovation, wealth, and opportunity, San Francisco was the place where tech dreams were built and fortunes were made. From the golden views of the Bay Bridge to the buzzing startup culture, the city was unstoppable. But in 2025, things have changed. The tech layoffs that started in 2022 haven't slowed down. Giants like Google, Meta, and Salesforce have scaled back. And with remote work now fully normalized, people are realizing they don't need to live in San Francisco anymore. The result? Housing demand has cratered. Prices have dropped by over 14% year over year, and that number keeps climbing. Luxury condos that once sold within days are sitting empty for months. Sellers are slashing prices just to get showings. But it's not just the economy, it's the environment. Crime is up. Homelessness is visible on nearly every block. Retail giants like Nordstrom and Whole Foods have left the downtown core, and for families thinking long-term, the city just doesn't feel safe anymore. Even high-income tech workers are packing up, heading to cheaper, safer, and more spacious cities. And here's the twist. Inventory is rising fast. More homes are coming onto the market, but fewer buyers are showing up. That's a dangerous combination. San Francisco isn't just correcting, it's in free fall. And unless something major shifts in the economy or local policy, this once golden city could become a long-term cautionary tale. Number 9, Phoenix. Arizona. Just a few years ago, Phoenix was the golden child of the housing boom. When the pandemic hit, people fled expensive coastal cities for affordable, sunny, spacious living. Phoenix delivered, in a big way. Home values skyrocketed. Bidding wars were common. Investors flooded in, scooping up properties and flipping them for quick profits. But in 2025, the desert heat is gone. The housing market, ice cold. Homes that used to sell in days are now sitting on the market for months. Inventory is up over 65% compared to just 2 years ago, and price cuts everywhere. So what happened? It's a mix of things. Overbuilding is one major factor. Developers raced to meet demand during the boom. But now, there are more homes than buyers. Then there's mortgage rates. They've stayed high, making monthly payments unaffordable for many. And the local economy. It hasn't kept pace. Wages haven't grown fast enough to support the prices. Jobs in construction, retail, and hospitality, all taking hits. Plus, let's talk climate. Arizona's rising temperatures and ongoing water issues are starting to worry buyers. For some, the long-term risks just aren't worth it. The result? A massive slowdown. And for those who bought at the top in 2021 or 2022, many are now underwater on their mortgages. What was once America's hottest housing market is now one of its riskiest. Phoenix is a reminder. What goes up can come crashing down. Number 8. Austin, Texas, 4 years. Austin was the darling of the tech world. A quirky, creative hub, transformed into a booming real estate powerhouse. Big tech moved in, remote workers followed. Home prices exploded, over 60% growth in just 2 years. From 2020 to 2022, you couldn't scroll through social media without seeing someone talking about moving to Austin. But now, that dream is fading fast. In 2025, Austin is facing one of the sharpest housing corrections in the entire country. Why? It's the classic story of too much, too fast. Investors overbought, builders overbuilt. Prices climbed way beyond what the average buyer could actually afford. And now, reality is setting in. Homes are sitting unsold. Price reductions are hitting almost every neighborhood, and sellers. Many of them are stuck, either unwilling to take a loss or unable to find a buyer. What's worse, many of the remote workers who once drove demand have moved on, went back to big cities. Others are chasing more affordable housing in the Midwest or Southeast. And that tech boom, it's slowed down. Layoffs from big companies like Meta, Amazon, and Google have hit the city hard. The once booming job market isn't what it used to be. Plus, locals are frustrated. Sky-high prices pushed many Austinites out of the market entirely. Now, with rising property taxes and declining home values, even longtime homeowners are feeling the pain. Austin went from hot to hurt, fast. And in 2025, it's clear. The hype has faded. The correction is here. Number 7, Boise, Idaho. Boise was once America's hidden gem, a quiet, scenic city tucked in the mountains with a low cost of living, safe neighborhoods, and a tight-knit community vibe. But everything changed during the pandemic. In 2020, in 2021, Boise became a magnet for out-of-state buyers, especially Californians fleeing high prices and dense urban life. A feeding frenzy. Home prices skyrocketed, in some neighborhoods by over 80% in just 2 years. Locals were priced out, investors flooded in, and Boise, once known for affordability, became one of the least affordable cities in the country relative to income. Fast forward to 2025, and now the crash is real. Boise just reported the highest percentage of price drops in the nation this quarter. That's not just a slump, that's a red flag. Why? Because the fundamentals never caught up. The job market didn't expand fast enough. The infrastructure didn't grow. And those pandemic-era buyers, many are now regretting their decision. People who moved here for a simpler life are now facing high mortgage payments, negative equity, and fading home values. And transplants? Many are packing up and leaving, especially as remote work becomes less stable and big employers pull people back into major hubs. Even worse, the rental market is softening. Airbnb listings are sitting empty, and developers are holding unsold inventory. It's a demand vacuum. There's just not enough qualified buyers left to support these inflated prices. Boise is a prime example of a market that got too hot, too fast, and now the bubble is bursting. Number 6, Las Vegas, Nevada. What happens in Vegas? Isn't staying in Vegas this time? It's spreading panic across the housing market. Las Vegas has always been a boom man bust town, but what we're re-seeing in 2025 is on another level. This city thrived on tourism, hospitality, and speculative real estate. But when all three start crumbling, you've got a serious problem. Right now, the cracks are showing, big time. Home prices have dropped more than 12% year over year, and that's just the average. In some neighborhoods, it's far worse. And the real danger? Foreclosures are back. For the first time since the 2008 crash, Vegas is seeing a sharp spike in defaults. Why? Start with the job market unstable. It's dependent on service and entertainment industries that still haven't fully recovered from pandemic-era shifts. Add in skyrocketing insurance premiums, rising property taxes, and cooling investor interest. And suddenly, those glitzy high-rises and suburban developments aren't looking so glamorous anymore. Many short-term rental owners, especially those banking on Airbnb cash flow, are now offloading properties at a loss. It's just to stop the bleeding. Even longtime residents are getting squeezed out. Utility bills are rising, wages are stagnant, and affordability is crashing through the floor. And let's not forget, Vegas, overbuilt, in the last cycle.
Oh.
There's inventory stacking up and buyers are backing off. It's a dangerous mix. Too many homes, not enough demand, and shrinking confidence. Las Vegas may look flashy on the outside, but underneath, the housing market is rolling the dice and losing. Number 5, Denver, Colorado, once one of the most desirable cities to live in America. Now, Denver is a city in distress. Let us rewind. Denver's housing market was on fire from 2012 to 2022. Prices doubled. Out-of-state buyers flooded in. Tech workers, remote workers, young families. Everyone wanted a piece of Denver. But in 2025, the dream is fading fast. Home prices are dropping sharply, down around 9% year over year. But that is not even the biggest problem. The real issue: affordability has completely collapsed. Mortgage rates are now hovering around 7%, and for many buyers, that means monthly payments have nearly doubled compared to just a few years ago. For first-time buyers, Denver might as well be another San Francisco, out of reach, out of budget, and out of options. Add in a growing number of tech layoffs and a cooling retail sector, and the local economy is struggling to keep up with the housing costs. Sellers are slashing prices, but buyers still aren't biting. Listings are sitting longer. Price cuts are accelerating, and investor interest is dried up. Even Denver's once red-hot condo market is seeing inventory pile up, a clear sign that demand is vanishing. And here's a stat that should scare anyone holding property. Over 30% of recent home buyers in Denver would be underwater. If prices fall another 5%, this is what happens when a city overheats for too long. Eventually, it cools off, hard. Denver's housing market is in correction mode. And unless something changes fast, the mile-high city might just hit rock bottom. Number 4, Sacramento, California. Once seen as the affordable alternative to San Francisco, Sacramento is now crashing under the weight of its own real estate boom. During the pandemic, thousands of Bay Area residents fled the sky-high prices of San Francisco and Silicon Valley and landed in Sacramento. At first, it made sense. Bigger homes, lower prices, quieter lifestyle. Sacramento became the poster child of the California migration shift. But in 2025, that gold rush has turned into a slow-motion crash. Here's what's happening. Prices in Sacramento surged over 40% between 2020 and 2022. But now, they're sliding fast. Inventory is up over 80% year over year, and that's a major red flag. Homes are sitting on the market for months. The listings are up, sellers are backing out, and buyers have disappeared. Why? Because Sacramento has priced out its locals and the Bay Area refugees. Most of them are no longer coming. Remote work isn't the same anymore. Tech layoffs have slowed migration. And now, Sacramento is left with a bloated market and shrinking demand. The rental market isn't helping either. Rents are dropping, vacancy is rising, and property investors are starting to panic. Builders are pulling back. Flippers are stuck with inventory. And everyday homeowners are realizing they may have bought right at the top. Here's the kicker. Sacramento was never built to handle a housing explosion like this. The city's infrastructure, economy, and job market haven't kept up. What looked like a safe bet in 2021 is now one of California's riskiest markets in 2025. Sacramento is correcting, and if you're watching from the sidelines, it's a reminder not every city is built for a boom. Number 3, New Orleans, Louisiana. New Orleans, a city rich in history, culture, and soul. But right now, its housing market is cracking under pressure. For years, New Orleans attracted home buyers and investors with its charm, low prices, and vibrant lifestyle. But in 2025, it's a very different story. Let's break down why this once underrated market is now one of the riskiest in the country. First, insurance premiums. After a string of hurricanes, floods, and natural disasters, many insurance companies have pulled out of Louisiana altogether. For homeowners still getting coverage, monthly premiums have skyrocketed in some cases, doubling or tripling over the past 2 years. There are homes in New Orleans where the insurance bill is now higher than the mortgage. Think about that. And that's not all. The city's infrastructure is crumbling. Roads, drainage, electricity, all struggling. Now combine that with rising crime, slow job growth, and a shrinking middle class and buyers. They're leaving. Investors are staying far away. Sellers are desperate. The homes that do get listed, they sit. Vacancy rates are up. Price reductions are common in new construction. They're practically frozen. To put it simply, the risk of owning property in New Orleans has become too high for most people. This isn't about short-term trends. It's about long-term sustainability. And right now, New Orleans doesn't have the foundation to support a stable housing market. In 2025, it's less of a buyer's market and more of a warning sign. Number 2, Oakland, California. Once considered a more affordable alternative to San Francisco, Oakland has officially entered housing crisis territory in 2025. Let's rewind a bit. Back in the early 2010s, Oakland was booming. Tech spillover from the Bay Area brought in high-income buyers. Prices rose. Investors jumped in. New developments popped up everywhere. But fast forward to today, that momentum has completely reversed. The median home price in Oakland has dropped nearly $100,000 compared to last year, and it's still falling, so what's going on? First, crime is surging. Residents report rising burglaries, carjackings, and violent crime. That's driving both families and businesses out of the area. Second, job loss. With the Bay Area tech contraction, layoffs have hit Oakland hard. Remote work, ESNT, saving the city anymore? It's actually speeding up the urban exodus. Third, investor panic. Institutional landlords who bought big during the pandemic, they're now offloading properties at discounted prices. Fast. That's flooding the market with listings. Buyers aren't biting. In fact, nearly 45% of active listings in Oakland are seeing price cuts. And here's the kicker. Some homeowners are now selling at a loss just to get out. Oakland's real estate market is unraveling fast. It's a city that once had potential. But in 2025, it's becoming a cautionary tale. The affordability is gone. The demand is fading, and confidence completely shattered. Number 1, Los Angeles, California. Welcome to Los Angeles, the crown jewel of the West Coast. And now, the epicenter of one of the biggest housing corrections we've seen in decades. Let's not sugarcoat it. LA is hurting in 2025. For years, the city symbolized luxury, opportunity, and endless sunshine. From Hollywood Hills to Santa Monica, buyers lined up to pay premium prices. Demand was unstoppable. Prices soared. But today, the dream is cracking. Here's what the data says. Over 40% of listings in Los Angeles are now undergoing price reductions. That's not normal. That's a signal. Signal that the market has lost its momentum. The pressure's coming from all directions. Affordability is at record lows. So the average home in LA now requires over 50% of a household's monthly income just to cover the mortgage. Inventory is surging. Listings that used to get multiple offers in days are now sitting for months. Defaults are rising. Homeowners who bought during the 2022 boom are now struggling with high mortgage payments, job instability, and vanishing equity. But perhaps most shocking, there's been an exodus of middle-class families. Families that once held LA together, teachers, nurses, public workers are leaving in droves, moving to states like Arizona, Texas, and Florida for cheaper housing and safer neighborhoods. And with them goes the stability of the market. Yes, luxury homes are still selling, celebrities are still buying. But the broader LA housing market, it's in free fall. And experts are already comparing this to the 2008 crash. Except this time, it's not driven by subprime lending, it's driven by reality. So if you're watching LA thinking about buying in 2025, pause. Look past the palm trees. Look at the numbers. Because this market, it's not just cooling off, it's breaking down. So, what do you think? Is this the start of another 2008-style collapse, or just a much-needed market reset? Let me know in the comments. I read every single one. And hey, if you found this video helpful, smash that like button, subscribe to stay ahead of the market. Share this with someone who's thinking of buying in 2025. Because when it comes to real estate, knowledge isn't just power, it's profit. Thanks for watching. This is the Real Estate Scouts, and we'll see you in the next one.